Release. Self-harm refers to destructive behaviors like cutting, compulsive scratching, skin picking, or hair pulling. But self-harm isn't always physical. Continually putting others' needs first to the point of burnout is self-harm. Isolating yourself, repeatedly allowing abusive people into your life, canceling doctor's appointments, skipping medications, eating too much or too little are also forms of self-harm. Self-harm is rooted in negative thinking. If self-harming, honestly ask yourself, why am I choosing this behavior? Journal about it. Ultimately, recovery from self-harm is learning to love yourself. So whether you cut, isolate, or struggled with disordered eating, be patient, but seek professional help.
For questions or more resources, text 258-1029.
The material discussed in this program is for information purposes only. It is not intended to be used as a recommendation for investing or as legal advice. Each person has his or her specific situation, circumstance, and objective, and should consult their own personal advisor or counsel.
Joining me now in our visual radio studios to talk a little bit about the economy, Jason Calcote is here from Citizens Trust and Investment Corporation. Jason, good morning.
Good morning.
Thank you for being with us, of course, and big news out of the Fed yesterday, right?
Yep. We had our Fed meeting in July, and as the markets expected, they did end up cutting the rates by 25 basis points or
Right.
a quarter of a percent.
Right.
This is the first rate cut since December of 2008.
Which I thought was amazing. In a decade, I was like, oh my gosh, it's been that long.
Yeah,
But
you wouldn't think so. You wouldn't think so, but yeah, that back when the bottom fell out in 2007,
Sure.
we cut them really aggressive, and now, we're finally bringing them back up.
And the reason, again, or the statement that they gave was because of concerns about the economy? I know they probably didn't use that word.
Right. Well, they kind of did. There was concerns over global growth.
Okay.
Was one of the big concerns. And then low inflation. The Fed is kind of trying to spark inflation up a little bit. It's a little below their target, which is kind of odd. You know, everybody thinks of inflation as something fairly negative connotation that goes along with it. But it needs to be in a certain range to show that we're growing. So they did reduce the benchmark lending range from 2% to 2.25%. It was 2.25% to 2.5%. And really, this is sort of an ongoing move to adjust to economic conditions. Like you said, there's concerns over global growth, the global economy as a whole, global trade.
Right.
Just a lot out there right now that isn't necessarily our domestic problem, but more of a global problem.
But we could be impacted by it.
Sure.
By these things that are going on.
Definitely.
And so, and the markets reacted.
They didn't react very well. He was a lot less dovish than the markets were thinking that he was going to be. If you recall, we've got dovish and hawkish are two ways that we describe the Fed. Dovish usually is associated with cutting rates, whereas hawkish is usually associated with raising them.
Okay.
Jerome Powell, in his comments after the meeting, really stressed that this was a sort of a wait-and-see approach. He did reference the patience language that we first saw earlier this year.
Right.
Because we started the year thinking we were going to have two rate hikes this year.
Right. That's right. Going in the other way, other direction.
And then June was really the deciding factor. I think the June Federal Open Market Committee meeting where they decided the market started pricing in this rate cut. So he did go on to say that this was more of a mid-cycle adjustment to their current policy, which the markets took to mean that this is not the beginning of a cycle of rate cuts, that this is going to be more of a maybe one, maybe two, and then really just step back and see what happens. So I think they were a little disappointed in that, and as a result, there was quite a bit of a sell-off yesterday.
Okay, all right. Let's take a look and see. You got the chart here from the Dow Jones, and you can see the little dip in our green line. Still above where we were last year, but as you can see, there's kind of that little drop-off there yesterday.
So the markets, they'd already priced in a rate cut. They're more concerned about what the comments were going to be after the fact. Less dovish, like we said, so the Dow closed about 330 points lower for the day, about a 1.2% drop. S&P and the NASDAQ kind of mirrored that drop. S&P was down about 1.1%.
Right.
And then the NASDAQ fell about 1.2% as well.
Okay.
It's starting the day up, though. That's nice.
Yeah.
The markets reacted accordingly.
Okay. But not a huge drop. I mean, I guess that's the other maybe silver lining, if there is one, I suppose, right? If you're talking about markets.
Yeah. I mean, they kind of knew it was going to happen. It was just now So really,
it's not like he hasn't been, kind of forecasting this for a long time, the possibility.
Exactly.
So, and you mentioned they've been working this rate cut into some of their forecasts and things.
Yeah, and then, it's priced into all the mortgage rates already.
Right.
So if you're looking for mortgage rates to drop all of a sudden, it really
It already happened.
It already
or
happened.
Probably.
Yeah. So now the market's really pricing two scenarios right now. We've got one scenario, and analysts are putting it at about a 70% chance that there's going to be 2 rate cuts for this mid-cycle adjustment.
Okay, so one more.
One more, second one coming in sometime in the future, not next month.
Right.
And then, so they're putting that at about a 70% probability that that's going to happen. So we've got this mid-cycle adjustment with kind of a soft landing, and then we sort of see what happens.
Okay.
Now the other probability, yep, we've got about a 30% chance right now that this is, the Wall Street analysts, this is what they're thinking, that this is actually the beginning of a cut cycle where we're going to be cutting towards zero because we're entering a recession.
The R word.
The R word.
The dreaded R word. Okay.
Yeah. So the probability lower for that.
30%.
30% chance.
But
yes.
they're still looking at it,
They are.
And they have to, I suppose, right?
They
so
have
2
to.
different scenarios.
Yep. 2 different scenarios right now. So really, we'll wait and see.
Right.
Wait and see how it goes.
And all these things are driven by the economic numbers, the indicators that we talk about every week here. So
that's exactly
that's
right.
where
That's
these
exactly
are
right.
coming from. What does all that mean for oil and gas? Anything?
Well, oil, we had a little bit of a drop, and it was tied to that, actually. So the Fed dropped the interest rates, so the dollar rose on that.
Okay.
And now oil is priced in U.S. currency.
Right.
So the demand for U.S. currency-backed commodities went down a little bit because the dollar was higher.
Gotcha.
So, yeah, we had oil slide about 2% yesterday, but still doing just fine.
Yeah.
It's within the healthy range.
Okay.
And then natural gas, it was actually up a little bit. It was a little green yesterday.
Okay.
So that's okay, but we're hanging out at about $2.30. So not quite where we want to be.
Right.
We'd rather be a lot closer to that $3, $3.50 range.
It doesn't jump around very much at the moment.
No,
so.
it doesn't. We just need to hope for a cold snap to come through.
Right.
And drive those prices up a little bit.
Yeah.
And then we've got gold.
We'll get some of these export contracts going,
Yeah,
I think, too, is
exactly,
the other maybe possibility. But,
Exactly.
And gold, what's
gold,
up with gold?
it's been on quite a tear this year, and it dropped just a little bit yesterday. It's about 1,400 an ounce, a little over that.
Okay.
So, it is a little bit of a safe haven right now still, but, it's been on quite a run, so jumping in right now may not be the most prudent thing to do.
Right.
And, we talk about diversifying quite often.
Sure.
And that's still the name of the game. You want exposure everywhere.
No matter what happens.
No matter
then
what
you're
happens.
good for whatever scenario comes to fruition.
That's true. If you've got a little checks and balances in your portfolio, that's how it should work.
Good advice.
Yep.
All right. Jason, thanks so much.
Thanks for having me.
That's Jason Calcote, everyone, from Citizens Trust and Investment Corporation. He is with me every Thursday right here on KSJE Farmington. This is the information and cultural beacon of the Four Corners. 90.9 FM and 103.3 FM. KSJE.